Welcome to Vantage Point Podcast, a podcast brought to you by NWR Communications and 92 Studio. This podcast is intended for education and entertainment purposes only and does not constitute financial advice. G'day and welcome to the latest episode of Vantage Point, where we're joined today by Michael Shelby, the Managing Director of Babylon Pump and Power, listed on the ASX under the ticker BPP. Babylon Pump and Power is a specialist provider of rental equipment, maintenance and water management services to the mining sector. He walks us through the transformation in recent years and its strategic acquisitions and why Babylon is now uniquely positioned as a high-margin platform targeting the full water cycle. We hope you enjoy. Well, Shelby, thanks very much for joining us from Babylon Pump and Power. I just thought we'd start off for those who are listening and hearing about Babylon Pump and Power for the first time. Just give us a story. What do you actually do? What do you focus on? And we'll go for there.
Okay, great to be here. Thank you. Babylon Pump and Power, we're a very small but growing mining service provider, headquartered and located primarily in WA. We do some work in Queensland as well. We were a startup in 2017, listed 2018, and we've been fighting for growth ever since. So we're a small company focused in water management. We saw an opportunity back years ago with some transitions in the market to really have a small company focused on water management for the Pilbara and for the big guys. We felt like there was a niche market there where the big, unique equipment, the unique assets that we have, a bit of the know-how, being able to apply that, there was a good opportunity to grow a company. We started out focused on that with rental, but part of being successful in rental, you need to maintain your equipment. You need to be able to work on it, build it, make sure it's in top-notch shape for your clients. So we're good at maintenance. And with that, we saw an opportunity as well to use our maintenance capabilities to bring in some work that way and get a bit of scale early days with a maintenance segment and rebuilding large equipment, large engines and whatnot for clients. So right now, the company has got two segments, maintenance and rental, complement each other from the services and the capabilities we have in the background, but it's two pathways to market, to the mining services market there.
Perfect. And if you just talk us through the sort of water management sector in terms of where you fit and the sort of competitive landscape, just so we can get an understanding there.
Okay. Water's a problem. Every mine site has a problem with water, either too much or not enough. And we're trying to put our arms around the entire water cycle. So from the very beginning, when clients plan a mine, when they're a greenfield expansion, or greenfields mine or brownfields expansion, you need to go and find the water, make sure you have access to good quality water, and make sure you don't potentially have too much. So with that, generally it's you develop various bores and whatnot to test the aquifers. We come in and at that very early stages and provide test pumping services. So we go and give clients the confidence that their calculations, their hydrologists are have the right model and able to get enough water, or maybe confirm there's too much water, that sort of stuff, in the aquifers, and that's the very early stages. From there, you have water management throughout the process of a mine site, throughout the life cycle, moving water around, putting it where it needs to be used, taking it from where it's not wanted, so you can continuously mine. And we have the pumps and the know-how to be able to do that. We provide the specialty assets, the specialty pumps, make sure clients are able to do what they do well, and that's mine the ore. Now, we feel like rental is the best option there because the pump that you're using today is probably not the pump that you need tomorrow. As mines go deeper, as they go bigger, you have more water. You may have seasonality where you may have more or less water, and you've got to tailor your approach, and that's what we're good at. We're good at having our knowledge base applied, working with clients to have the right assets there. And then on the tail end, you might have too much water and you need some assistance in evaporating it, getting rid of it or treating it and that sort of stuff. And we have unique technology to help evaporate water and get rid of it in a sensitive manner without having damage to the environment, that sort of stuff. So that's where we're trying to operate, is the assets. Yep. We're not trying to do the engineering on the front end. We're not trying to do the hydrology. We're not designing stuff. We're just providing equipment and people to maintain that equipment and make sure it runs well. So we're a very specialized provider.
Sure.
You have some large companies that are, quote, rental companies that have pumps, generators, chainsaws, hand tools, everything like that. we don't do the wide breadth of equipment. We focus on water and the associated bits around it, which includes some power to run the pumps.
Sure.
So we're not trying to be everything to everybody. We're trying to focus on that and really hone in and have a very niche offering to the market. And that's where we don't spread ourselves too thin. We can focus on that and have the right assets there.
And so you listed in 2018. If you just take us on a bit of a journey in terms of, obviously nothing good is ever linear, but
Yeah.
the different challenges along the way, and just the sort of stepping stones in terms of getting to growth. The businesses that you may have acquired. We'll obviously get to the latest couple in a little bit, but just sort of talk us through the timeline there.
Journey is a polite way to put it. It's a bit of a roller coaster ride. It's got its craziness and its ups and downs, and I've really enjoyed it. But it has been a challenge. But anything worthwhile is challenging. Early days, it was a fight for survival. We were just trying to be taken seriously, to create some scale, and make sure that we have good capability. So early days, we fought for every dollar, and we needed to grow quickly. We needed to be able to get some good cash flow coming in, some good turnover. And so that's why the quicker route early days was down the maintenance area.
Yep.
So with that, first acquisition we made was of Prime Power, which is based in Mackay in Queensland. Very specialized engine rebuilder, which gave us a footprint into Queensland and also provided some top line revenue and some turnover there, and gave us a bit of a breadth of offering. So that was the first step that we made in the process. But since then, we've really focused on the rental market and making sure that our acquisitions come with good assets that are water related. We've done a few dry hire type pumping companies, which the acquisitions coming up, Blue Hire is one of those. Another one that we completed a couple years ago was RBH, which gave us a good swath of assets and pumps down in the southwest of WA, and brought on our largest rental client right now, Newmont.
Yep.
So we have that, and then we also have some specialty stuff with the test pumping, where we've brought in RWG, which fits in with the Matrix, which is the upcoming acquisition, so to really solidify and grow the test pumping opportunities. And we've got a industrial services business, Ozblast, which kind of sits on the side, but it's pumps. It's pumps and vacuum trucks. It's industrial services. It's working with our current clients, providing services on site. And it's fluid management. So same type offering. So we're very familiar with it. We're very comfortable with the assets. So that's why we felt like it was a good fit.
And in terms of the actual assets themselves, so you own everything outright. Like, can you just talk us through your fleet and your FTEs and the size and scale and up and down that you can flex through that?
The fleet, we grow our fleet through a combination where we feel like we have the capability to assemble our own fleet. So we like to kind of do what we can to build it up to a specialty focus, robust, fit for Australian conditions. Because if you go out and just start buying pumps, a lot of pumps are manufactured overseas. We have very hot conditions up in the Pilbara, so cooling packages and whatnot are very important. So we feel like we do tailor our equipment to the local market. But our fleet's primarily pumps, a lot of diesel-driven pumps, some electric-driven pumps, and generators to help drive some of the electric-driven pumps. And those range from hybrid-type units through to diesel as well. There is a transition from the big machines burning a lot of diesel, but that is taking some time. But we have been able to make inroads in providing hybrid-type solutions as well. But it's on a client-by-client basis. Some guys love it. Some guys are a bit more reluctant, and we just feel like we're here to provide clients what they want, what they need, and work with them for their best solution. So the size of the fleet will almost double with these acquisitions, which is going to be great. There'll be more tools in the toolbox. With this acquisition, we will be taking on a bit more debt to pay for them, but the debt is backed by the assets, and that's why I feel like we've had a good reception in the debt package. Is those hard assets, good robust stuff that people are happy to, make loans against. So with that, we will continue to grow this way by asset financing and buying equipment where we can, but also building internally and using our free cash flow internally to try to build and grow the fleet as we see fit.
That all makes complete sense. And just shifting, it's a perfect segue into the sort of strategic transformation of these most recent couple of acquisitions. Can you just talk a little bit more in detail as to what they are, why they fit and why now?
Okay. Both companies are very familiar with us and vice versa. We've been working with these companies for years. Matrix is a test pumping company that fits right in the same wheelhouse of our test pumping activities. We've been working with those guys for well over a year, kind of hand in hand. We support them when they're lacking equipment and people, and then they help us when we're lacking equipment and people for certain jobs as well. So we have a great working relationship there, and it really just expands our capability on the test pumping side of the business, and feels like we'll have more tools in our toolbox to better serve our customers, because a lot of that work is based on site works, and you're trying to manage crews with their time off and that sort of stuff. So having more in our toolbox allows us to better serve clients. Blue Hire, pumps, mainly diesel-driven pumps, mining market, not so much agriculture, not so much industrial infrastructure build, that sort of stuff, but good mining-based gear. So with that one, again, we've been working and known the ownership there for years, working hand in hand, supporting each other, trying to backfill each other's needs, because it is a capital-intensive industry, and it's nice when you have some friendlies who can help satisfy clients. So again, very familiar with their operations and their people, and we feel like that's a easy transition to bring them on board and really just have a better offering and a wider offering for their clients.
And just from a pricing perspective, in terms of those acquisitions, what was the
structure of both deals?
There?
Yeah, but structure of both deals is very similar. Overall, it's about 3.5 times the FY24 EBITDA, which we feel like it's good value for the vendors. Obviously, they've endorsed the deals, but also for our shareholders as well, making sure that we're not raking anybody over the coals, but we're not overpaying. We feel like there's good value, and in both businesses, the ownership groups will take some shares for the long run for us as well. We'll have some extended escrow for the shares that are in both companies. But again, both structures are relatively simple. 3.5 times FY24 EBITDA is the basis, 2.5 times up front. So we'll pay a bit of cash, bit of shares up front for both of them, and then there'll be an earn-out over FY26, and there's a bit of a sliding scale on the back end to incentivize performance, but another 1 times relative earnings on the back end.
Perfect. And it obviously changes the landscape in terms of from a group perspective with regards to financials. What does it sort of go from to now as a combined group?
Yeah, as a combined group, we don't give guidance. We can't give guidance. But if we look at the FY24 performance, and if we just did kind of a pro forma there, we would be up around the $54 million in revenue and roughly $14 million EBITDA as a combined group. So it is a significant step change for us. In years past, we've grown and we've taken what I would call maybe more baby steps or smaller bites. And we've had, obviously some organic growth as well. But we feel like this is the opportunity to make a bit of a bigger step. Let us digest this one for a little while and integrate, digest, and execute. But it's a nice, larger step forward to where we want to be, as our ambitions are to be, a mining services provider with much higher earnings.
And market cap at the moment, 17 million bucks.
Yeah.
So how much debt we have on the balance sheet, if I'm trying to figure out from an enterprise value perspective?
Current debt sits about $11 million right now.
Yep.
But when we're done with this, we will be taking on a package of debt. And with that, we'll effectively be taking on about 18 and change. So 18, I think 18.35 in new debt. There's a little bit of a repackaging of some existing debt.
Yep.
But we'll have, if we think of it in 3 different tranches of debt, $5.1 million invoice finance facility. That does not change. And we have a roughly $5.5 million asset finance facility. That'll just be drawn back to $5 million. So those two are small, if any, changes, and that's about $10 million. And then the other tranche will be roughly $21 million, and that's the refinance of the 2.8 existing wrapped in with 18 of new.
Sure. So when we look at it in terms from market cap of sort of 16, 17.
With about 30 mil of debt on top
45,
of that. Yeah.
And when we talk about that you just bought these businesses on 3.5 times, which you'd hope is somewhat cheap and can grow.
Yeah.
There's some propensity in the share price to reflect.
We hope so. We have to execute, and we have to deliver on what we've promised or what we've said we're going to do. But I feel like my job is pretty simple for the short term: head down, execute, and deliver on that, and the share price will take care of itself.
And I know we spoke about the usual names in terms of the ASX, but what do you think? This might be a bit of a probing question, but I'll ask anyway. What do you think investors are missing? Again, you're probably trading on less than 3.5 times EBITDA. Yeah. I'm assuming before making this acquisition, you just bought businesses that at that multiple, which is a sort of reflection that you should be worth more, obviously. What are investors missing?
Yeah, I mean, obviously I'm a bit biased. I think we should be worth more, but I think we're missing the scale. The credibility. For us, if you look at it from a pure share point of view, we need to have the underlying earnings, but we also need to make sure that we have some liquidity for people to come in, buy in, and not feel like that when the purpose is served, they can sell out as well. So I think by getting the scale and getting on the radar and being taken seriously, that we're past all the survival years. It's always a bumpy road. We're always going to have a bit of up and down, but I think there was a lot of focus on, are these guys even going to survive? And I feel I'm fairly proud that fought hard, a lot of blood, sweat, tears, and pain and whatnot, but we've managed to succeed, to grow, and to, I think, be taken seriously, and now add on a few more big chunks, and we're here, and we should hopefully be taken seriously and as a real viable someone to step up.
And in terms of, you talked about vesting these guys with equity and escrow and whatnot. I think I've heard you in the past talk about, it's not just about the assets, but also the people. Can you just talk us through, why that's important for Babylon Pump and Power?
In mining services and in small businesses, assets are key, but the relationships, the people, the ability to get stuff done, that's key. Being able to go speak to clients, have time on site, look them in the eye, just like I need to be able to look at shareholders in the eye and let them understand that I understand where they're coming from, and I can be trusted as a good steward of their investment. Same thing from that point of view. We want to be able to go to site and look at our clients in the eye, and they can see, you know what you're doing. You're going to be able to deliver. Assets are one thing, but the people, the creative problem solving, the can-do attitude, the energy is another, as a whole nother matter that needs to be put forth. And we feel like as a small company, there's no room for people to hide. You always, I've worked for some very large companies, in my life, and it's, you kind of hear the large companies are the haven for scoundrels type thing. There's no hiding in our company. We have a very flat organization. I'll walk in the office and I talk loud enough in my little corner that the whole business can hear me. So we're all on the same page, and we're all pulling the rope in the same direction. And these vendors that are coming on board, they are young, energetic, entrepreneurial types. Obviously, they know what they're doing to get to the point where they are, and I feel like it's my job to help release some of the shackles of owning and running a business. They will be able to flourish, hopefully, and with that, their shareholding the company should appreciate as the company does well, and so they're heavily incentivized.
As I always say, show me the incentive and I'll show you the results. So it's good to vest them in that direction. So you've made these couple of acquisitions. I'm assuming they're pretty chunky. It gives you the scale. There'll be a strong focus around integrating those. Is that it for acquisitions, or how do you look at that?
We're always on the lookout. As a listed company, a lot of opportunities come across my desk, and we have to cast a pretty good filter across everything. I can say that my focus right now and the team's focus is for integration, execution. But these deals take time. You may be speaking to someone for a year plus before you actually get to the point where you hammer out a deal. So I always have conversations going on in the background. Not all of them work out. There's just benefits from being in the swirl of the market there. But if a great opportunity comes along, it's something that we as a management team and we as a board will always consider. But that's not my primary focus right now. My primary focus is integration, execution, and showing discipline going forward with these acquisitions.
That sounds very wise. And just for investors who are looking at Babylon Pump and Power for the first time and potentially thinking about buying stock or investing in the company, why would you say that they should do so without providing financial advice necessarily? And what are the sort of key catalysts? Where's Babylon Pump and Power in 2 years' time?
Why look at someone like us? Because water is a problem. It's always going to be a problem. It's going to be more important in years to come. So we feel like we're in an area. It's not always the sexiest area. The big industrials or even the small industrials like ourselves. It's not always that sexy, but it's a problem that's not going away that needs to be solved. And we feel like that we have the assets, the know-how to be there and be in that mix of solving that problem. So with that comes more opportunity. We're not going to get distracted by chasing frivolous type ideas for growth. We're going to be disciplined and stay where we are and focus on water, try to focus on rental, and try to focus on providing good customer value. So with that, I think the results will come, and we just need to continue to show that to the market. So that's where we're focused in that area. So if an investor feels like water is going to be important and feels like the resources industry and the mining industry is going to be around in Australia for a while, then we're going to hopefully be a very key part of that.
And just the next 12 to 24 months or 2 months' time?
Next couple of months is bet them down, get them completed, and maybe take a deep breath.
Crawl, walk, run before start thinking about that.
And then from there we start the new year, and we're going to start off trying to run fast with these, but it's going to be the discipline of just executing on what's cleanly there in front of us. We need to, it's never smooth. There'll be some ups and downs over the next couple of months, but we have the commitment from everyone just to make sure we work through it. I expect that in the next few months we'll kind of hit the ground running, move forward. Let's see how we go at the mid-year results next year, and I think next year, the full year, will be a good year for us, and with these acquisitions on board. So with that, then it's a bit of take a deep breath at that point, and we look at we should have some good organic growth opportunities, and where there's always, like I said, stuff that crossed my desk from more acquisitions, but we're going to be very selective in what we do.
Sounds like you're laser focused in terms of the strategy going forward. So good luck with it, and thanks very much for joining us.
No, thank you.
Perfect. Thanks, Michael.